Hey guys, it's Max. What's going on? Welcome to the video. Today we're going to talk about Bitcoin to keep under your radar this week and your potential for Bitcoin and what it might mean for the coin price today. Guys, even though we've had recent dip, hear me out. Make sure to like this video, subscribe, and comment your thought below if you enjoyed the video. Guys, and let's go straight into it. Now, governments are looking to buy Bitcoins, and NIDIG CEO confirmed sovereign wealth fund may soon become the next major investors to enter the Bitcoin scene, guys. State-owned investment funds are reportedly making inquiries into buying Bitcoins, and according to Robert Gutman, now the CEO of New York Digital Investment Group, the firm has actually been having conversation with several and had conversation with several sovereign wealth funds about possible Bitcoin investment. Gutman made this known while appearing at a visual podcast with investment strategist and founder of Real Vision, Raoul Pal. And this is good news overall for the Bitcoin because it just shows that people are slowly starting to accept it. Now, Pal also confirmed that Gutman's revelation stating that Singapore's sovereign wealth fund Temasek was indeed a Bitcoin investor. And according to Pal, guys, Temasek, which holds about 306 billion in assets under management, has been buying virgin Bitcoin from miners. And that is insane, guys. And tweeting on Thursday, Pal characterized the imminent entry of sovereign wealth funds into the Bitcoin space as a wall of money. And indeed, guys, since publicly listed firms like MicroStrategy and Tesla began holding Bitcoin on their balance sheets, there has been speculation about whether government would follow suits. And so this was a little bit controversy, but it's still amazing news because it's drawing parallel between the appeal of Bitcoin for public firms and sovereign wealth funds. Gutman touched on the desire of institutional investors to hedge their dollar denominated liabilities. And guys, according to Gutman, investors are actually reevaluating their portfolio and he added, if you look at the world today on the forward basis, guys, he says it is reasonable to be asking yourself as an investment committee or as an allocation committee, if having all of these assets denominated in dollars against dollars denominated liability is the right allocation mix. And so back in August 2020, upon announcing its first Bitcoin purchase, MicroStrategy CEO Michael Saylor touched on the long-term value of Bitcoin vis-a-vis the depreciating value of cash over time. And this is why there's strong debate now whether Bitcoin can actually take that hedge against the dollar. And earlier in March, guys, Russ Kostrich, portfolio manager at BlackRock Global Allocation Fund, characterized gold status as an inflation hedge as being exaggerated. And this just shows that people are slowly starting to support Bitcoin. And Bitcoin is currently down 8% over the last 24 hours. So I know but what is likely to be an upside price dislocation, given the significant decline in the volume of Bitcoin held on the exchange. Despite, guys, the current drop, Bitcoin is still up about 78% year to date. And three reasons why Bitcoin will unlikely trade below 50,000 in the near term is because Bitcoin held the 50,000 support while derivative indicator remained healthy. And so hear me out, even if you're not really good into indicators, listen. It's signaling investors' optimism because Bitcoin is showing tenacity above $50,000 threshold on March 25th. And the 10% drop, guys, over the last 24 hours happened despite Tesla allowing customers to actually buy vehicles using Bitcoin, in addition to CEO Elon Musk affirming that it will not be converted to fiat currency. And guys, on March 22, the United States, actually the Federal Reserve of the United States Chair Jerome Powell stated that Bitcoin was too volatile and that it was backed by nothing and more of an asset for speculation. But curiously, on that same day, Bitcoin lost its 56%, $56,000 support, which became a resistance. Now, traders worry that the pump might have been news-driven, while the downtrend movement should prevail. Guys, although this is possible, derivative indicators aren't leaning bearish, and any decent correction will likely meet strong support at $50,000. Part of the uncertainty investors might have derived from the record 6.1 billion option expiry on March 26, but nevertheless, guys, 84% of neutral to bearish put options are already deemed worthless as Bitcoin price soared above 50,000. And guys, moreover, the CME holds 980 million future contracts set to expire on the same day, guys. And although buyers going long and sellers shortings are matched at all times, some traders worry that Bitcoin price could be pressured by future traders looking to roll over their position into April and May. Guys, unlike perpetual futures, those fixed calendars CME contracts have a set expiry dates. Thus, guys, to maintain a long position, one must buy the April or May futures while simultaneously selling the March contract. Thus, guys, to better assess whales and arbitrage desk influence on the market, one should closely monitor derivative indicators. Now, the future premium remains bullish by measuring the expense gap between futures and the regular spot market, and a trader can gauge the level of bullishness in the market. And if when looking at the 3 months future, they usually trade with a 10% to 20% versus regular spot exchange to justify actually locking the fund instead of immediately cashing out. Guys, whenever this indicator fades or actually turns negative, known as the backwardation, it indicates that the market is bearish. But the above guys chart actually shows that the indicator recently bottomed at 17% on March 25th, while Bitcoin tested the $50,000 support, and this is extremely bullish as it signals leveraged buyers remained optimistic and unwilling to reduce their position. And so this just shows that the Bitcoin is here to stay, because whenever the basis reaches 35% or higher, it indicates extreme buyers leverage. But that's clearly not the case right now. And the option skews has been neutral since January 19th. When analyzing options, the 25% delta skew is the single most relevant gauge. And guys, this indicator compares similar call buy and put sell options side by side. Some analysts actually point to the put call ratio, but this metric fails to exclude worthless options such as the right to sell Bitcoin at $45,000. Thus, the delta screw offers a less polluted number and will turn negative when the put option premium is higher than similar risk call option. Guys, such a positive screw translates to a higher cost of downside protection, and it indicating again optimism, and it shows again that people are remaining bullish on it. And the opposite holds when market makers are bearish, causing the 25% delta screw indicator to gain positive ground. But over the past 5 weeks, the screw indicator remained flat, indicating no optimism or pessimism from whales and option market makers today. Now, a screw indicator between -10 and +10 is deemed neutral, and meaning that a balanced risk assessment. That's what it means in terms of balanced risk assessment. Now, retail traders are not behind the high futures basis, as futures and options provide mixed sentiments, and one should also monitor the perpetual futures funding rate. And such a fee is charged every 8 hours to ensure derivative exchange hold no risk imbalances. And so wherever it turns positive, it means that buyers' longs are the one paying the carry cost due to larger leverage use. And the current 0.04% average is relatively neutral, equivalent to the 0.8% per week. And although longs are the ones facing such fees, it is far from being considered costly. And such data actually indicates that retail traders are not creating an arbitrage opportunity, causing actually the fixed calendar futures to trade at a premium. Overall, guys, derivatives indicators are healthy and are not to be scared of. And considering Bitcoin is down 16% from the 61,800 all-time high on March 13, such data leaves room for further buying activity. So traders shouldn't be worried and should consider consider this as a Black Friday sale for you to hop in. And guys, I hope you found this video valuable and you enjoyed the video. Please make sure to like, subscribe, and comment your thought below if you enjoyed the video. And I'll see you in the next video. Bye.